Welcome to KupunaWiki, Hawaii's senior resource, the radio show that helps you find answers on important topics like finances, senior housing, estate planning, real estate, health, and much more. Now, let's join KupunaWiki hosts Brandon Lau and Andrew Leon.
Aloha and welcome to the KupunaWiki radio show. This month we are discussing the topic of finance, and in studio we have Arinaga, Senior Vice President of Chinen&Arinaga Financial Group. KupunaWiki is Hawaii's senior resource. We talk to the best local professionals in the state regarding topics such as real estate, senior housing, estate planning, finance, and health, so our Kupuna families can find the best resources in the midst of a life transition. We strive to make sure our seniors are informed and supported every step of the way. Thanks for joining us today. I'm Brandon Lau.
And I'm Andrew Leon,
your host for the KupunaWiki radio show.
If you missed any of our shows on air, the KupunaWiki radio show is available as a podcast and can be found on both Spotify and Apple for your listening pleasure. Our title sponsor for today is Cheney Brooks Choice Advisors, providing you with the best real estate information so you can make the most informed decisions. As they like to say, real estate is about choice. To contact them, call 753-9033.
And now we have our real estate tip of the week brought to you by Cheney Brooks Choice Advisors.
A homeowner's insurance policy will protect you against certain losses and damage to your new home and is generally required by lenders prior to closing. Some lenders will collect the money you owe for homeowner's insurance as part of your monthly mortgage payment and place it in an escrow account, paying the insurer on your behalf when the bill is due.
For more information on homeowner's insurance or anything regarding real estate, contact Cheney Brooks Choice Advisors at 753-9033. Again, today we have the pleasure of speaking with Arinaga, Senior Vice President of Chinen&Arinaga Financial Group. Welcome, Martin.
Good to be here. Thank you, Brandon. Thank you, Andrew. Looking forward to this time together.
Yeah, well, we appreciate you being with us, and we know it's somewhat of a challenging time, but you're here, and I'm sure you'd be a blessing to our listeners, so thanks for being on our show. For those who may not know of your financial group and what services you provide, maybe you can give us a little of your background and the background of your company.
Sure. The company I represent today is Chinen&Arinaga Financial Group. Mm-hmm. We are a locally based firm right in Mililani. We started in 1992. Alan Chinen, Flo Chinen, myself, and my now current deceased wife, Pam.
Wow.
Four of us started in 1992, and we've grown it to the point we now have 30 employees. We've got half of them are advisors helping clients with making decisions, and the other half are support, put out all the fires that the advisors put out.
Right. It's a good combination. So you folks focus on the everyday family, or do you work with larger organizations? Who do you specialize working with?
The majority of our people we serve are families. Mm-hmm. We do have a handful of small businesses, very few unions we serve, but primarily it's the Mr. and Mrs. family unit that we serve. And we are looking at a overall portfolio. We're looking the questions that come up a lot. Am I on track to retire?
Right.
What do I need to do? Mm-hmm. I want to send my children to college. Now, that's a lot of money. How do we afford that? Where do we find the money?
Right.
Every now and then we still get people say, I've got student debt. And I help me get
probably
out
more
of there.
So now than
yes.
before, right?
Yeah.
So you're helping answer these very basic but important questions for everybody's financial future. And I'm sure you have a diverse amount of experience and background just helping the everyday person.
Yeah, we do. Yeah. Again, I'm speaking for myself, our group.
Right.
Everybody brings to the table their own history, their background, their experiences. But I think the one group that we serve very well are employees of the state of Hawaii, city and county, and largely because we know the employee retirement system better than most. I've been working with that system for 40 years. I've seen it going through the metamorphosis of contributory, non-contributory, hybrid, now the tier 2 hybrid. So it changes a lot.
Right.
And we try and put it together on the field of retirement. The question is, do I have enough? So we put together the three primary sources of retirement income, which is the pension, Social Security, and personal savings. So with pension and Social Security, you can't really put more money in or decline participation, but you still have choices within each plan. When are you going to retire? What option are you going to take? Social Security is a big piece of someone's portfolio,
Right.
but it's poorly understood. The plan for many people is, I'm going to work till 62,
Right.
I'm going to retire, and I'm going to start my Social Security.
Right.
That's the plan, and it's in their head for 30 years, 40 years. And I always say, well, that is a plan, not the plan. You need to look at what you're not going to get.
Sounds like maybe our financial literacy, for a lot of us, hasn't been updated in decades. I mean, we'll start off with this idea when we start working. Yes, we'll have a financial advisor, but sounds like we need to continue to learn all the time because everything changes, right? Like when you mentioned pension, Social Security, and personal savings, right now are we at an all-time low in personal savings? And do we have to then beef it up in these other areas, right?
You know, I don't know offhand, but I think if I were to research it, I think we are probably better today than in the past, but not enough.
Right.
You talk about financial literacy, with the access to data, you have online, you have websites, you have apps that you carry in your pocket.
Right.
So I don't think it's a shortage of information. It's quite the contrary. I think it might be too much information and sometimes of the wrong kind. And putting it all together in a way that makes sense gets quite confusing. You boil it down to rules of thumb, which carry with it some dangers, or just straight up rules. I have to put 10%. Well, it depends, you know. Like this plan is always better than that plan. A Roth is better than a traditional. So the challenge is to take all this data, all this information from different sources and making it work for you. So one of the things I've learned is that there's the book smart. You can learn it in a text. You can learn it by listening to radio. But then it's, I guess, the financial street smart, where he says, okay, but that's not right for me. This is what is good for me and why. So I think the value that we, Chinen&Arinaga, bring to the family unit and our small businesses, sorting through the data and answering the question, so what? What do I do with it? What does it matter to me? Because the data information is out there. We need somebody, we bring to the table someone who understands it and can apply this data in a way that makes sense. And of course, explain it. I'm a visual. I draw a lot of boxes and arrows and come up with potatoes in the refrigerator stories. And people look at me and go, what? Where'd you come up with that one? I don't know. This he's a chef, so he understands potatoes in the freezer, you know. So a lot of it is just communicating in a way that makes sense. And bottom line is we want people to make good decisions, make a decision, and when that is made, a good decision that's going to serve the client and their family well over the long term.
Right. Now, we're in a situation right now with this pandemic where I think a lot of people are paying a lot more attention to their pocketbooks, how much they have, and also what's in their account. What kind of questions are you getting these days as a financial advisor?
That's a very good question. I think the questions are still the same. I think what's changed is a level of urgency. The question that we hear a lot is, am I on track? Can you help me understand my retirement system, my options? How much am I going to get? How much can I expect? Is there a formula? How does it work? So this is things that we work with, but I think with the current health crisis, many people have accelerated their timetable for retirement. So one person who I spoke to recently says, I was planning to retire in 2 or 3 years, but I'm very concerned. I have, underlying health issues, and she named a few. I go, yeah, you're right in the bullseye here. So she says, I want to retire. I'm not ready to retire, but I have to seriously consider retiring for my health.
That's interesting. So
can I do this? So the urgency has stepped up.
Right. So a lot of people who may not be quite ready or wasn't part of their plan are now thinking, well, can I be ready sooner? Or is right, because they're thinking, I was thinking 3, 4, 5 years. I mean, those that are 10 years away, they don't even, they know it's way out of reach. Right.
But those that are 3, 4, 5 years are now saying, I qualify for retirement. I chose to stay, or I'll qualify in next January.
Right.
now I'm thinking about retirement very seriously. So we go through. So it's really has accelerated the need for information, of education, and the mindset too, because they want to do this. It just
they don't know how.
The dial just got cranked up.
Right. Well, Martin, I definitely want to talk more about the sense of urgency we have and how you're able to help your clients as well as Kupuna deal with the situation. So we'll talk more about this right after this commercial break.
We'll be back with more KupunaWiki right after this.
Cheney Brooks Choice Advisors assists clients in buying and selling their homes by striving to create an easy and seamless transition. With multiple awards spanning most transactions of the year, Client Service Award, and being in the top 100 realtors, Cheney Brooks Choice Advisors wants to provide you with excellent service and care when making a major life decision. Over the years, their agents have greatly enjoyed serving each and every one of their clients as if they were family. Whether you're a first-time homeowner or a senior, they understand the challenges and complexities of the real estate process and want to help you every step of the way. Cheney Brooks Choice Advisors wants to provide you with the most information so you can make the best decision. Because, as they like to say, real estate is about choice. Contact Cheney Brooks Choice Advisors today for a free in-person property valuation by calling 753-9033 or email them clientservice@choicehi.com.
Welcome back to KupunaWiki on AM 690 The Answer.
Welcome back. If you're just joining us, we have Chinen&Arinaga, Senior Vice President of Chinen&Arinaga Financial Group. Right before the break, we were just talking about financial pictures, right? How some people are thinking that, okay, they have X amount of years, they plan to retire, but, due to COVID, some of the timelines got pushed up. Now, there's a sense of urgency that, hey, do I have enough, or will this be enough, or how long will this last me, right? What are some of these examples that you can provide to your listeners that, well, what to look for, what to consider, in terms of, well, should I retire now versus maybe try to stick it out maybe a year or two, and see, if the benefits get better?
Thank you, Brandon. I'm thinking of some of the cases that we've been working with. There's one that pops to mind. She's recently retired, so this is done as far as the decision making, but she is with a major healthcare provider here in the state of Hawaii. Mm-hmm. And she had an option of taking a pension, X number of dollars guaranteed for life, or a reduced amount guaranteed for you and somebody else, and variations of that theme. And her question was, Martin, should I take my pension, and if so, which options do I take, or should I take a lump sum? So we had to do the math, and I said, okay, look, if you take a lump sum, we have to do as good or better, because there are a lot of benefits of taking a pension. It's a low stress, certain low risk option, but you also have no options after that. You get income for life, and that's it. You can't change your beneficiary. You can't change the option. If you roll it over, then we also have some uncertainties there as well. You have opportunity for potentially higher rates of return, but potentially higher. So as it turned out, she chose to roll her pension over into a personal IRA account, and she's taking monthly income. And in hindsight, I think it's good, because she's already called me wanting to take an extra distribution to help her daughter, get through some school costs. She would not have been able to do that with a pension. Now, I did, of course, bring to her attention that if you did that, you just shrank your retirement nest egg by X number of dollars, and she understood that. Right. But we're able to actually use some of these things I talk about. So that's an example of one person that we help to serve. The very common option is, especially going back to the state retirement system, you have the lifetime income versus two lives. It's single life, and they call it joint life. Again, most people want maximum income. Well, single life. But if you die, guarantee is we'll pay you for life, while your life just ended, end of in the payout. They go, oh, I don't like that. So, well, okay, so you can take your joint and your survivor, name a spouse, and depending on your age, and to make the adjustments, but you cannot change your beneficiary. And I always bring to light cases that I've experienced where your spouse passes before you, or worse yet, you get divorced. Now, guess who's your beneficiary? Your ex-spouse. So, I mean, there's no perfect world. Again, going back to, there are no guarantees in anything. It's hard to determine what to do, but you just have to put all the options on the table, understand pros and cons. If you can quantify what you feel by putting it in dollars and cents, a little bit of math there, but it'll help you to make a better decision. That's what we want people to do. Understand some of the factors that are involved, and don't pick an option because your neighbor picked an option, because your colleague picked an option. Right. You are unique like everybody else. And that's what we try and do, is, again, educate and guide. And people, I think, studies have shown, people do make better decisions.
Right.
Given the information presented and with an advisor assisting along the way.
Right. So, Martin, if somebody wanted to retire, and let's just say that they weren't planning to do so until 5 years from now, but they have a health concern, so they want to do it, what's a practical way that they can do so and maybe seek another alternative form of supplementation to their income? Like, what would you recommend? It'll break down into taking inventory, projecting your income, including how long will it last, right,
and then looking at options, second career, part-time work, downsizing of a home, kicking the kids out of the house.
Yeah.
That's a joke. That's a joke.
Letting them support themselves.
Charge them rent. There you go.
Yeah. That's good.
So as far as inventory goes, I think that the typical family has three primary sources of income. The first is their company pension, if at all.
Right.
Now that is becoming rarer and rarer.
Yeah.
If you're not with the federal, the state, or some of these larger organizations and in management position, you don't have the beauty of what's called a pension. Pretty soon that word's going to vanish off people's vocabulary.
It'll be in history books.
It'll be a history. So, what is that, Grandpa? You mean what? People pay you for life guarantee?
Yeah.
Really? Why would people do that? So that is, again, assessing if there is a pension. If so, most organizations have a human resource department or a website, in the case of the state and federal, that you can actually go on and input your basic data. It'll give you a projection, not a guarantee, but just based on the information you put in, a projection.
Right.
So that's the first piece. Take inventory of piece number one.
Right.
Piece number two is Social Security.
Right.
That most of us do qualify. There are a small segment that do not qualify for Social Security or are subject to offsets or things like that. But for the most part, Social Security, the basic is at age 62, you may start. Once you start, that's your income, you get it for the rest of your life. However, if you're not full retirement age, and based on your birth date, there's a date. For me, it's 66 and 8 months, something like that. But if you take it before your full retirement age, most of us is going to be 67 or later, you don't get 100%, so you lock in the lower rate. And then if you wait further than that, beyond that, then it goes up even more, 8% increase per year till 70. So again, with Social Security, it's available, but the question becomes, do you start it now at a lower level, but get money in your pocket, versus delay and get a higher amount? Then the question comes up, how long will I live? Good question. I don't know.
And a lot of people, they say, well, I'm never going to retire. And in fact, a good friend of ours, Cullen, says, don't retire, rewire. Try to change your perspective, maybe not working full-time, but being a consultant of some sort.
Right. Well, yeah, I'm in that situation. I don't plan to retire. I like what I do, but I'm a realist.
Right.
My body's only going to go so long. My brains are going to go hopefully longer than my body. We'll see. Or at the very least, a desire to change what we do. Now, the challenge with many of us that are in a day job situation, you can't do what you just explained. Right. You're either working or you're not. So you retire, you flip a switch, and there's a particular day you become a active employee to a retiree, and everything changes. So there's a switch. If we're in self-employed or we have some control on our business, like you guys are, self-employed, you can determine what you want to do or not to do. We can begin to phase out gradually. I think that's a preferable way to do it, or phase in part-time work.
Right.
To see, do I really want to do this? Did I really want to be a florist? Did I really want to, train people in a gym? Whatever your interest is, it may not be an issue of money, but it may be an interest, issue of can you sustain this for a long time? And as an employee, you do have to give value back to your employer.
Right. Right.
So I much prefer a transition.
If you can, right?
Over a flip the switch and now I'm retired.
Yeah. Now, right now we're in a market where it's quite volatile. Fortunately, a lot of the stock values have come back up, so that's a good thing. We can feel comfortable about that. But what lesson maybe have we learned in the past 6 months? Aside from that urgency that you're helping people with, what other lesson can we take away?
I think one of the biggest lessons that I have learned, and it was reinforced in hindsight, everything's in hindsight, is that it's really not that different this time around. And we make bad decisions if we listen to our heart. For example, this is later in the year, 2020, earlier in the years when the COVID hit, and once it became what has brought to light the extent and the potential damage it could do both to health and to the economy, and the government induced, they made a decision to shut it down. That, of course, was not good. We saw a drop. About 2 weeks after that, we had oil price wars. That in itself would have created a volatile, decreasing market. But put the two together, we had a huge decline. Now, I've been working with clients for many years, so before it even happens, I talk about long-term, don't make emotional decisions, don't bail out at the bottom, don't get greedy, don't throw in because prices are good. And I did get a few calls, but fortunately, given the number of people that we serve, the number of calls that came in were very, very small. I think that's because we laid the groundwork, the foundation. And even if people didn't move, they call me, they want to hear me. They says, I knew you were going to tell me that. I just wanted to hear you tell me that. I needed the reassurance. Yeah, they needed the reassurance because if you don't have, again, back to the advisor, if you don't have someone guiding you, or if you haven't really been through these types of volatile markets, economic turmoil, social unrest, if you haven't been through it, it's very easy to get scared out of the market or say, oh my gosh, it's going to go down further. I'm going to call my company now and bail out. I'm going to wait. And I'm going to buy when it gets better. Usually you will miss that increase. So I think the one thing that I would bring to the listeners' attention is that we do have volatile times. It's going to continue.
Yeah.
Sorry. But you have to remember, over time, the investment, the equities market, stocks, bonds, domestically and internationally, the trend is in our favor. And when we try and mess with the trend is when we start to make our mistakes. And a lot of times what we have built over the past X number of years, it can be gone in a very short time. And the more you trade, the more likely you're going to make mistakes, wrong decisions at the wrong time. Don't follow your heart, follow your mind.
Follow your plan.
Follow your plan, and the plan should be you're in here for the long haul. Don't make short-term decisions at the peril of your long-term goals.
Right. And also, I think you had mentioned at one point, it's brought to light that, hey, maybe we need a little cushion, an emergency fund, right? I mean, has that happened with some of your clients? It's just a reminder.
Absolutely, yeah. I mean,
wake-up call.
A lot of our clients do have state and federal positions, and fortunately, they continue to get their income. But again, their spouses, unfortunately, do not have the same type of comfort. So their income just got chopped in half or had declined. So it came to light how important it is to have savings.
Right.
And 3 to 6 months, it can't hurt, but for a lot of people, 3 to 6 months of take-home pay, that's in the thousands of dollars. That's out of many people's reach. But again, the more you have, I don't think you'll complain when times like this come around and you do lose your income.
And who would have thought we'd be shut down for 6 months?
That's right. And then there was a point in time, even as state employees, there were discussions about reducing or discontinuing income. Now, as a state employee, I mean, that never occurred to you that's possible.
Right.
Fortunately, we didn't do that.
Fortunately, yeah.
It was on the table at one point in time.
Right. Well, Martin, thank you so much for sharing with us your wisdom and words of advice. We appreciate you educating our listeners and ourselves as well. So again, Martin Arinaga, Senior Vice President of Chinen&Arinaga Financial Group. Thanks for being on our show.
You're welcome, Brandon, Andrew, and KupunaWiki listeners. Thank you very much. It was my pleasure. Please contact me when you need help.
And if they need to reach you, how can they do so?
808-548-2234. 808-548-2234.
Thanks so much, Martin. We appreciate it.
Thank you.
Coming up next, we have our KupunaWiki Classic Trivia.
We'll be back with more KupunaWiki right after this.
Cheney Brooks Choice Advisors assists clients in buying and selling their homes by striving to create an easy and seamless transition. With multiple awards spanning most transactions of the year, Client Service Award, and being in the top 100 realtors, Cheney Brooks Choice Advisors wants to provide you with excellent service and care when making a major life decision. Over the years, their agents have greatly enjoyed serving each and every one of their clients as if they were family. Whether you're a first-time homeowner or a senior, they understand the challenges and complexities of the real estate process and want to help you every step of the way. Cheney Brooks Choice Advisors wants to provide you with the most information so you can make the best decision. Because, as they like to say, real estate is about choice. Contact Cheney Brooks Choice Advisors today for a free in-person property valuation by calling 753-9033 or email them clientservice@choicehi.com.
Have you ever been worried leaving your loved one alone? Whether it be illness, a fall, or just personal safety, the electronic caregiver mobile medical alert system with GPS technology will give you that peace of mind. With the simple press of a button, an on-call staff member will be able to locate you and provide expedited help by alerting family or emergency medical services. To learn more about the electronic caregiver, call Priscilla Wong at 954-0820 and mention KupunaWiki to receive a free gift. Welcome back to KupunaWiki on AM 690 The Answer.
And now we have our KupunaWiki Classic Trivia brought to you by Cheney Brooks Choice Advisors.
Each island of Hawaii has an official color that originally represented that island's most prominent lei flower. The Big Island's color, red for the red ohia, is likely the most well known. What is Oahu's official color and flower?
For a chance to win a Long's gift card, be the first person to call us with the correct answer at 808-792-5188. And we hope everyone is staying safe during this time. And remember, if you want to hear past episodes of KupunaWiki Radio, you can go to KupunaWiki.com, where you can hear our previous episodes as well as be introduced to our great service providers. Go to KupunaWiki.com or call us at 808-792-5188.
Again, we'd like to thank this segment sponsor, Cheney Brooks Choice Advisors, providing you with the best real estate information so you can make the most informed decisions. As they like to say, real estate is about choice. To contact them, call 753-9033.
Well, thanks for joining us today on the KupunaWiki Radio Show, Hawaii's senior resource. We strive to make sure our seniors are informed and supported every step of the way. Again, I'm Brandon.
And I'm Andrew.
And we'll see you back next time on the KupunaWiki Radio Show.
You've been listening to the KupunaWiki radio program. If you'd like more information about today's topics, please call us at 792-5188. That's 792-5188. Or visit us online at KupunaWiki.com. Until next time, aloha.
The preceding program was sponsored by KupunaWiki, Hawaii's senior resource.